Markets are dynamic, momentum is evolving. As investors explore structured strategies, Kotak Mutual Fund has introduced a new fund offer, the Kotak Active Momentum Fund, based on model driven momentum strategy. Joining us today is Mr. Rohit Tandon, fund manager at Kotak Mahindra Asset Management Company Limited, to share his insights on investment model, earning filters, and navigating market cycle. Welcome to the show, Mr. Tandon.
Thank you.
So, Mr. Tandon, let's start with you explaining us the core idea behind the Kotak Active Momentum Fund.
I will say this. There are analysts who are covering stocks. They are doing a constant research, trying to meet management, do primary research. And on an aggregate, there is a lot of information that they have, which is important for price movement. We are trying to aggregate all that information through this fund and trying to produce a fund which can give a good amount of outperformance, at least which we have seen in the back test, to our clients. Second of all, if you look at factors research, then earnings momentum as a factor has given a consistent good amount of alpha. It's a known factor. Third, markets are a slave of earnings. As earnings go up, prices move up.
So, before we dive deep into it, can you please also explain the difference between earnings momentums and price momentums? And why should one opt for earning momentums? Should they look at the company as a whole that's growing instead of just its stocks?
Sure. So, what is price momentum? It is a trend following. Prices are moving up, you keep buying. Prices are coming off, you keep selling. Earnings momentum, on the other hand, is more fundamental. It is based on the fact that if earnings do well, if there are earnings surprises, then prices would move up automatically. So, you can understand that price momentum can be because of several things, but earnings momentum and earnings momentum led performance is because there is a genuine structural uptick in earnings.
So, that is, of course, a better choice to go for.
Sure.
So, now could you also throw some light on the enhanced earnings factor model, the model behind this new fund?
So what we have done is we have a proprietary earning enhanced model that we have created for this fund. It ensures that we are not looking at just one parameter to define whether a company is going to show structural earnings growth or it's not showing structural earnings growth, whatever. But we are using multiple parameters. So this model consists of several things which ensure that the stock is actually, or the company is actually showing earnings growth. It is like not betting on just one batsman, but betting on 6-7 different batsmen to work for you in a match.
So, please kindly explain a little more about the different parameters that you mentioned. What are those parameters on which this whole model has been built on?
So I'll go back. There can be two kinds of earnings revisions or earning upticks that can be. One is like an earnings revision, which is like a small creep that is happening. Analysts meet companies, they get to know more, then they meet people on the ground, they understand more, they have an industry view, and slowly they keep raising earnings. And the second thing is all of a sudden the numbers come. What you have built in, what analysts have built in, and the final numbers, there's a huge difference, either positive or negative. So that is like a surprise. And a surprise, most of the times, can be just a one-off. Yeah. But on the other hand, this earnings revision is something which is happening slowly. So what we are going to do by these parameters that I've just informed you about, they are going to ensure that we are sticking to mostly earnings revisions, which is more on a structural nature, which is replicable and not a one-off earnings surprise.
Okay. So, Mr. Tandon, I'm sure there must have been back testing done for this particular fund before, making a strategy. So, could you share the key findings of that back testing? How has this model been based on this strategy?
So, the model has been back tested. The parameters they threw an output on basis of that, portfolios were created for like 12 years. So we had 12 into 4, 48 portfolios, which were sort of back tested. And there is significant alpha. So in terms of, looking at the benchmark, after costs also, we have around 8.5% of outperformance. Yeah, which is like 850 bips. And even versus price momentum, assuming that there is no cost being attached to price momentum and all the cost is attached to earnings momentum, even there is a significant 100 bips sort of alpha.
So, what about the days when the market is down, or it's volatile? How has this model helped in those situations, or how has this model reacted?
So there are 4 periods we have looked at, which were periods like COVID, periods like the banking crisis of 2018, etc., etc. So over all these periods, the model has done better after costs, has done better than the price momentum model or the price momentum index, and it has done either inline or a little better than the index, which is very creditable, because as I said, there is a significant alpha. So the alpha has not sort of been immediately lost when there is a bad event.
Okay, so now coming back to Kotak Active Momentum Fund, can you also please share a few reasons why should investors look at this new fund?
So first of all, this is a quantitative model based fund, and there are no human biases that are creeping into the model. The second thing is that even among factor-based models, it is based on a fundamental factor. Yeah. And the third thing is that versus all other factors and versus the index, it has shown a better performance. So there is alpha. The fourth thing, which is important for investors to note, is that there is a good amount of diversification. So even as far as caps is concerned, large cap versus mid cap, there's a diversification. As far as sectors is concerned, it is well diversified. There is some bounce up and down, but it is well diversified. So I would think that for a person who is into quantitative strategies or who is beginning to look at quantitative strategies, this is a fund that they should definitely consider.
Yeah, if they're definitely looking at something diversified, then Kotak Active Momentum Fund is really a good choice for them.
Sure.
Thank you so much for joining us and sharing your insights.
Thank you so much.
So that's a word from Mr. Rohit Tandon. Momentum, when backed by fundamentals and driven by disciplined model, can offer you a structured lens to view market trends. The Kotak Active Momentum Fund NFO period is from 29th July to 12th August. Stay tuned to Kotak Mutual Fund for more. Thank you for joining.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.